liquidity isn't matches up with the 4-year cycle in Bitcoin, great. Then we have a 4-year cycle. If it doesn't, then it doesn't. I don't want to say, oh, it must be a 4-year cycle, therefore I must go short on this date if the fundamentals say, no, we're going to double from here.
Yeah.
I mean, I think the 4-year cycle is more potent when the inflation rate in Bitcoin is higher, right? So obviously, the earlier we go back in sort of the block size rewards, the higher the annual inflation is of the currency, and therefore the more impact of what change in miners' behavior based on the block reward happens. So I would say the 4-year cycle, if that's your cycle, would make more sense the further back in time you go. But today, what's annual inflation? I don't know, 1%, 2%, whatever. It's a very small number. So what the miners do or don't do with, was it 6.25 Bitcoin per block?
Bitcoin's breakout above $125,000 isn't just another rally. It's a reflection of a deeper shift in global liquidity and monetary power. Arthur Hayes, the co-founder and former CEO of BitMEX, believes Bitcoin's recent surge beyond $125,000 in October 2025 marks more than just speculative enthusiasm. It reflects a fundamental shift in global liquidity dynamics. As the current CIO of Maelstrom, Hayes argues that Bitcoin's price movements are now driven less by its traditional 4-year halving cycle and more by macroeconomic liquidity flows and policy decisions from major central banks. The halving effect, once crucial when Bitcoin's inflation rate was higher, has diminished in significance as annual inflation now hovers around just 1 to 2%. Instead, Hayes views Bitcoin as the most sensitive and immediate barometer of global fiat liquidity, surpassing even gold in this role. He emphasizes that Bitcoin has evolved into a mature global asset class, integrated into institutional discussions and monetary analysis. Its price now reacts swiftly to shifts in liquidity, interest rate expectations, and capital flows, serving as a real-time reflection of global monetary health. In Hayes' view, Bitcoin's ongoing rise is not a short-term rally but a structural revaluation of its role in the financial system, one where it functions as the world's first truly free market indicator of liquidity and risk appetite. The biggest crypto moves are on the horizon. Hit subscribe and turn on notifications so you don't miss the next breakout as it happens.
The most successful ones are in the United States, maybe Metaplanet here in Tokyo. And so that's sucking up a lot of attention. Oh, we're doing, I'm launching a DAT, or I'm participating in some sort of capital raising for the DAT. So that's sort of what's going on in the ecosystem. Then obviously you have a lot of westernized VC funds who have a lot of money. They need to deploy. There's not really that much stuff to buy. So the valuations are creeping higher. We're not really doing much venture capital investing these days. It's too expensive. We think that people are overpaying for things. And so we'll wait a few years till the bear market and we'll be redeploying again. But again, most of the people who trade crypto actively are in Asia. And so obviously the exchanges are doing very well. The Hyperliquids, the Binances of the world, the Sexes, the Dexes, their clients are over here. All around Asia, except for China, everyone uses Western social media. Especially, we're talking about the mass people, right? They use Instagram, they use Facebook, WhatsApp, X, these types of platforms. And so if Elon Musk and Zuck are deputized by Besson and Trump to go and provide dollars to the world, okay, cool, we're gonna give you a virtual crypto wallet, and a Tether or some sort of stable coin can now be transferred between anybody who has a WhatsApp account. And all of a sudden, you've just given dollar banking to essentially all the masses around Asia. And that's what they want. They don't want their local currency. They want to be just like the rich person. They don't want dollars. They don't want their local currency. They want dollars. And so now that they have dollars, then the central bank loses the control of the currency. And there's nothing they can do about it. Because if they complain too much, then Trump says tariff because you're not allowing American businesses to operate freely. And Besson says sanction to XYZ rich person or politician if you really complain too much. Well, we know where your money is, so don't bitch too hard. I mean, I'm not, obviously when I was running BitMEX, I wasn't as much involved in sort of the speculation. I never really was into this. I understand why there's a 4-year CapEx cycle in mining and the halving and all that sort of stuff, but I never really was focused on it. Obviously, as I've transitioned more into the CIO role at Maelstrom, I'm only focused on liquidity. If liquidity isn't matches up with the 4-year cycle in Bitcoin, great. Then we have a 4-year cycle. If it doesn't, then it doesn't. I don't want to say, oh, it must be a 4-year cycle, therefore I must go short on this date if the fundamentals say, no, we're going to double from here. I mean, I think the 4-year cycle is more potent when the inflation rate in Bitcoin is higher, right? So obviously, the earlier we go back in sort of the block size rewards, the higher the annual inflation is of the currency, and therefore the more impact of what change in miners' behavior based on the block reward happen.
Okay.
So I would say the 4-year cycle, if that's your cycle, would make more sense the further back in time you go. But today, what's annual inflation? I don't know, 1%, 2%, whatever. It's a very small number. So what the miners do or don't do with, was it 6.25 Bitcoin per block is less of importance today versus what is the Treasury Secretary or Finance Ministry or Central Bank of XYZ country, what are they doing with the fiat in which you price crypto? That's more important than the miners.
Gotcha.
The broad macro is stablecoin is the tool that Besant and the U.S. monetary architecture is going to use to re-dollarize the world and sink trillions of dollars of T-bills.
Yeah.
And then the following for that is, well, how do we make money on that? Is if you give billions of people a dollar bank account who didn't have one before in the form of some sort of stablecoin that's on-chain, well, now they're going to use DeFi. And so I have 4 particular projects that I'm going to highlight, which I believe are going to be beneficiaries of this trend in terms of stablecoin adoption, and therefore people have the thing that can use the platform. Well, I mean, it depends on what price you bought Circle at. So if you got allocated shares for free in Circle, you're laughing, right? It's great. Right. But if you're going in and buying Circle at this insane, these insane multiples, I think that, I'll lay out why. I think Athena will become eclipse Circle in terms of second largest stablecoin.
Yeah.
And then I think Tether is going to increase the dominance that they have in the stack. And obviously there's going to be lots of competition from TradFi banks in the US to get into the stablecoin game as well. So I think Circle is probably the worst position if you had to buy $1 worth of their equity today versus anything else you could buy.
Gotcha.
As the world drowns in freshly printed money, Arthur Hayes believes Bitcoin is emerging as the only true lifeboat in a sinking fiat system. Arthur Hayes argues that the fiat financial system is trapped in a cycle of endless money printing, unable to sustain itself without constant liquidity injections. Genuine economic growth, he notes, has become increasingly elusive, with technological advances like artificial intelligence creating more productivity but also threatening widespread job losses and social instability. As automation displaces workers and debt burdens rise, policymakers face a stark choice: either fundamentally restructure wealth distribution or continue printing money to prevent collapse. This relentless monetary expansion has steadily eroded the purchasing power of fiat currencies, with the US dollar losing roughly 30% of its real value against gold over the past decade. In this environment, Hayes highlights Bitcoin's growing relevance as a strategic hedge against currency debasement. With its fixed supply of 21 million coins, Bitcoin stands in direct contrast to the inflationary nature of fiat money. He sees the growing institutional embrace of Bitcoin, led by products like BlackRock's iShares Bitcoin Trust, IBIT, as a defining moment in financial history. For Hayes, Bitcoin is no longer a speculative asset but a global barometer of monetary confidence, offering investors protection in a world addicted to liquidity and perpetual money creation. Let's get back to the interview.
If you think about North Asia, right, apart from Japan, right, which is sort of a pseudo-U.S. colony that has imported their monetary system, you have South Korea, a very good exporter, control currency. Taiwan dollar, very good exporter, control currency. China, very good exporter, control currency. Malaysia, control currency. Thailand, semi-control currency. Indonesia rupiah, semi-control currency, right? So every single major population center, global exporter is either a closed currency system or very, very controlled. And what do you see around the region? It's okay, I'm a XYZ TradFi, bank, and I have this wealth management division, and I have all these wealthy, politically connected elites who own all these businesses who don't want to get their money inflated away, because that's generally the policy of all these countries. Okay, we're going to give you a substandard rate of interest, you being the average saver, work your butt off, have really high productivity, and you see none of those gains, they go to the corporates. And so who owns those corporates? The political and financial elite. What do we do as bankers? Hey, we got this insurance product, we got this structure, and somehow you're able to turn your Korean won into this dollar, and then, or Hong Kong dollar, and then guess what? We've got these auto-callable equities you can buy. We got all these things you can buy in dollars because we know you don't want the won or the Taiwan dollar or the ringgit. Right. And that's the game. If you want to play in these highly liquid, these stories like, Tom Lee talking about BitMine. Obviously, I'm an advisor for that, UPXI US in the US, right? If you're a retail person and you're paying $2 for $1, why? Because and you should understand why you're doing this, because you expect in the near future that these management teams are going to be able, through capital raising and financial engineering, to create a stock that's big enough and trades enough so that a Vanguard, a BlackRock, a State Street, one of these passive or semi-active money managers can include this in the index, in the investable index. And then once that happens, it doesn't matter about the fundamentals of the company. They have to buy it. That's the game.
Yep.
And so if you're able to understand, okay, well, I think these are the funds that could buy my stock. What are the requirements? When are the rebalances? What dates do these indices tell you, okay, this stock has made the cut or has not made the cut? If you're a true investor and a true trader and you really want to understand how you're going to make money, understand that. And I understand, if that's a little bit too hard, then don't trade these things. And then I think the Solana narrative from $7 to $280 was, people getting over the FTX issue and then meme coins, right? And so, are we going to repeat the amount of interest relative to everything else? In meme coins, I don't know. We look at the statistics on Pump Fund, 99.999% of people lost money. And so if everyone's just losing money, is it going to continue at the same pace as before when you have this other narrative where, people are making money net? Either they're, staking in, earning yield or whatever, right? So I think, what is the next narrative for Solana other than meme coins? I don't know what that is, and maybe they'll come up with one and then we can reevaluate whether that price prediction. But I think at this level, if I had $1 of new capital, I go ETH over Sol. My mental model, and this is very speculative because we're years away, is I think 2028 timeframe is going to be the top of this particular cycle because it aligns with the sort of political cycle of the U.S. And I think odds-on favorite is that Team Blue Democrat beats Team Red Republican in 2028, only because it's pretty much impossible for any politician to keep all their campaign promises, and therefore the population that supports them become apathetic and don't show up at the polls. And then the other side wins, right? That's just how it happens. And so I think that Team Blue Democrat has to prove that they're not like Trump. And so while Trump is the same policies than anyone else, they might get a little bit more hostile to some of the monetary mechanisms that Trump is using, maybe stable coins, maybe other piece of banking legislation, and sort of this like muddling about, and sort of then after another team takes over, causes questions. Oh, are they going to continue printing money at the same pace? I mean, obviously, yes, they are. But sitting there in the moment,
I see what you're saying.
After all this, massive gains,
crazy stuff that we're going to see for the next.
I think that's sort of the, where people start taking money off the table in a big way, and we see, a big flush out and a proper bear market. So at least something that blows up, but we know the response, they print money, right? So again, the fiat system it must continue to print money unless it has growth. And so unless you're going to tell me, and even if you have growth, and what's growth these days, it's AI is going to make this euphoria that takes everyone's jobs, which is great, and I hope that happens. But then what happens with your car payment and your mortgage payment when you don't have a job? Yeah. And we haven't created the system that says, okay, well, we've created all this wealth, let's share it. That's not very human. And so we created all this wealth for everyone, and now everybody gets to take a part, even though they didn't put in the capital in the beginning. That's just not how we've operated globally in any country from this date onwards. And maybe we'll get there after this AI post-scarcity world. Maybe. But there's going to be a big, adjustment factor. And a lot of people aren't going to like that. It's like, well, I put billions of dollars into building this AI. Why are you giving everyone, a $50,000 UBI income who didn't do shit, right? That's not very, I can see that happening. But without that, then everyone who's got a job, who keeps up on all these interest payments globally around the world, no longer has a job. And therefore the entire financial system collapses unless we change the way we think about who should be winning and who should be losing, or we just print all the money and take away all the debt, right?
France's deepening fiscal crisis could expose the Eurozone's structural fragility, forcing the European Central Bank to resume large-scale money printing to stabilize its markets. Such renewed liquidity injections would likely weaken the euro's credibility and push investors toward harder, non-sovereign assets. In this environment, Bitcoin stands out as the clear beneficiary, a scarce, borderless asset immune to political manipulation or inflationary policy. As central banks expand their balance sheets to contain fiscal risks, capital is increasingly flowing into Bitcoin, positioning it not merely as a hedge against monetary instability but as a cornerstone of the emerging, decentralized financial era. Could Europe's brewing debt crisis become the catalyst that sends Bitcoin to new all-time highs? Bitcoin is moving fast. Share your thoughts in the comments, spread this update with your network, and subscribe to stay ahead of the next major market move.